Guys, we are now in week 5 of the program, and you have gone through the learning of the importance of goal setting, having clarity in your business, and systemizing your business processes. So, this week, we are going to talk about one of the biggest obstacles to scale your business, which is cash flow and the key numbers we need to take note of being a business owner. So, a business can end a fiscal year showing a solid profit but still find itself out of money. We often focus too much on profit on paper and not enough on cash flow can be doomed to fail in your business. Yet, when a business struggles with cash flows, they generally have a first reaction. So the first reactions that we have normally is like, we need more sales. Well, it's kind of true, but not entirely true. So the painful truth is that receipts often lag behind sales. Suppliers demand payments or else they cut you off and loans become due. So this is why we need to do this and focus the key numbers and cash flow in your business. I know this is gonna be your favorite topic in terms of business, but it's the most important things to know your numbers in your business. Um, I know. Let's get this started. Everyone's challenges comes from a different causes. So, an accurate cash flow projections allows you to stay alert in your business while you wait for the profit you see on your books to become reality. Here's a guide to follow down to get to the root of your cash flow challenges. You'll notice that what's happening in your business that costs you low in cash. So we break it down into two parts in cash flow. So we have the actual incomings and we also have the actuals outgoing. Okay, so to start getting an accurate cash flow projections, we need to look at our past data. So our data doesn't lie to us, it gives you a clear indication on how much you should project for your incoming and outgoing in the next quarter. So prepare your recent 3 month bank statement and start putting down the numbers into your cash flow projection spreadsheet. So you may request your recent profit and loss statement, we call it P&L statement, from your accountant if you want to. If you do have more than a year data, it will be great. You may compare month to month basis because your business trend might be different according to different season. So, for example, some business has actually more sales revenue during the festive season and some doesn't. So, cost of goods sold, even in different seasons, they price differently. So, by reviewing your history of cash incomings and outgoing closely, it shows you when is your sales peak and if there's any delay in terms of your payments. Okay. So I'll cover like the 4 key challenges in your cash flow. So the first one, we look at the poor collections on your receivables. It's my observations like throughout the years that many businesses ignore the vital functions because they are uncomfortable asking people or companies for money. Yet the cost to the business can be massive and only compound as the company grows because you have more customers. So remember, once you make a sale, you have all those costs of goods sold. If let's say you are in the fitness business, you might actually hire more contractor as in like a PT. So those are the costs every sales that you make. So if you don't collect on that sale, you're actually worse off than if you ever made the sale in the first place. So the poor collections is really important. So that's the first place to look at if you are suffering from a cash flow challenges. Okay, in your bank balance sheets as well as your collections practices. So ask yourself a few questions. For example, are you collecting all the monies what you are owed? Are you collecting this money in a timely basis? How much are you spending your time on your collections efforts? look into this the first challenges. So I'll cover the second one. So the second cash flow challenges, it will be the pricing is a little bit off. Most businesses set their prices when the business is new and desperately needs business, which is the money coming into business. So as a result, they set the pricing level pretty low. Over the time, the business may make nominal increases to pricing every few years, but rarely does the owner, like the business owner, ever sit down and fundamentally rethink about the pricing model. So you might want to look into your pricing model if you do have this cash flow challenge. So where do you start looking off? So where what you need to look at is look at your gross profit margin. That number is a great tool to help you figure out if somehow your pricing model is off. Pay close attention, especially to your gross profit margins, including breaking it down by client or product or service category. Okay, you have your premium customers, you might have your economical customer, entry customers. So break it down into category. So that's the second cash flow challenges. So talk about, let's go to the cash flow, the third challenge. Your expenses might be too high relative to your sales volume. So first thing we need to know that cost matters. So early on, business owners know this and agonize over every penny spent. But as the business grows, you will no longer be able to be the hawk, watching closely whatever you have spent in your business. So you can't actually track every single dollar that you actually spent. So what you need to do is to go through your P&L statement, okay, your profit and loss statement, and questions every expenses, especially the big three, as in like the top three expenses in your cash flow outgoing. So it can be staffing, can be your capital expenditures, it can be your office fixed costs. So can you make an arrangement or any cuts for any one of this? So you might able to look into negotiating with your vendors for better pricing. Okay, so you can actually make a fixed expense variable, like paying commissions and lower annual salary package. Okay, just try to look into your expenses and see what would be the ratios from your total expenses, which is your outgoing in cash flow, against your incoming. Okay, let's move on to the next one, which is the last one, the fourth cash flow challenge. It might be your sales, this times it might be your sales are relatively low. Okay, after looking at the above like three cash flow issues, the bottom line cost may simply be that your sales revenue or your sales, the number of your sales are too low. So there's three things that you can actually increase your sales revenue. First is the number of a customer. Okay. The second one, increase average spending per customer. The third one, increase frequency of purchase per customer. So these are the three things that you need to remember. So first, number of customer, increase average spending per customer, increase frequency of purchase per customer. Okay, so can you encourage your customer to upgrade to higher value products or services in your company? Maybe bundle it up in complementary items to increase your average unit per sale. Do all you can to reduce the attritions so you keep your customer longer. Before we end this, so I need you to not rush off to sell your way out of a cash flow challenge, but making sure you take a moment to see if what is the real root cause of your cash flow challenges. Okay, to wrap this up, I hope that I can actually help you grow your business and get your life back. Okay, so get your life back, we need you to focus on identifying the real reason why your cash flow is low. So once you identify them, you need to fix them. So if you do have any questions, please comment on the video below. So I'll do my best to help you to resolve it. Bye.